everybody. Welcome to your Thursday edition of the TraderMerlin Show. More volatility. What did you expect? Great moves today, and a market that just couldn't really figure out what the heck it wanted to do, ending up slightly down on the day. And we will look at some of those market charts here today throughout the show, actually. We're going to talk about futures, maybe even sprinkle on some options on futures and things like that. So I'll encourage everybody, if you are watching live right now, and hello all, I'm not doing the shout-outs to everybody today. It could take too long. We got a big group here. But if you have questions, send them into the chat. Jerry and I will look at those as we progress. And just so I know they're coming to us, if you start a question, do like a couple question marks before it so I can scroll through and see what is directed at us. But anyway, we'll get things rolling. Here's our topic for the day. Active futures trading. Some people looking at futures as maybe a swing trading vehicle, others looking at it as just a day trading vehicle as it was intended to be many years ago. But we'll talk with Jerry here in just a second about what he likes to use, how he uses it, maybe even some trade setups that he sees out there. So, Mr. Baldwin, how you doing, Jerry?
Merlin, I'm fantastic. How are you doing? It's so good to be here.
It's great to have you back, man. It's been far too long. What have you been up to?
It always is far too long. We definitely need to do this more often, and I'm so excited to be here, and people are excited to see us back together. So it's great. I've been doing great. I've been doing a little bit of traveling, which I'm really grateful to have been doing. Trading the futures market, loving this volatility. This is insane. What's been going on in the last couple months, and so doing really well, enjoying things, continuing to educate people as best I can on the futures market, and really enjoying things and having a great time.
Nice. I guess we can start right off with this current market situation. How you enjoying or handling this insane volatility we've had lately?
Watching the ATR go up every day, Merlin. So it's just seeing the average trading range expand, providing more and more opportunities for us, and it's been a lot of fun. I will say that it's nice to have the flexibility of not only the futures minis but also the future micros, because some of the candles, like you're saying, with the size of the volatility and with the size of some of these candles, it's nice to be able to use the micro future, in addition to the mini or in place of the mini in some cases, just to be able to moderate and manage that risk at a really high level. So tremendous volatility, but equals tremendous movement and really good stuff.
To echo what Jerry's talking about, I just put ATR on the chart here so you guys can see that. It's the highest level of ATR we've had since 2020, since the market crashed. Now, of course, we peaked much higher than that back in 2020. The ATR, daily ATR for the S&P 500 was about 181 points back then. Right now, you're looking at a daily ATR of about 111, whereas for most of 2021, we were down around 50. So we're double the volatility we had last year. Of course, some people freaking out about that. If you're in Jerry's camp and my camp, it's awesome. Love that volatility. Let it move. Let's see more action out there over the coming months. Hopefully not due to any war or conflict, just because, we need to have more volatility.
Exactly, yeah. We'll keep it as positive as we can, but you're right. Yeah, the increased volatility absolutely just creating a lot of opportunity in specifically for me, the the 4 U.S. equity markets I love trade, the Dow, the NASDAQ, the S&P, and the Russell. And I've really kind of expanded out a little bit with regard to now a little bit on gold, and then also a little bit with the CL. So I try to find the highest probability trades, highest probability setups, and I don't want to look at 1,000 products, but I do want to be able to look at a good handful or maybe a couple more just to really find the strongest ones, and that's increased probabilities for me as well. It's just really kind of narrowing in on what's making the moves at that time, and certainly following trend and some other indicators as well to be able to identify that. But that's been a lot of fun, and that's actually even broadened my horizon, which has been a lot of fun.
Walk us through some of the things that you're looking for with regards to actively trading futures, since that's kind of the topic du jour. Obviously, when we look at longer term perspectives, our time frames are going to be different. Maybe some of the tools we're using are different. So what are some of the things that are critical to you when you're active trading? And maybe define active trading for you. I mean, for me, active trading was high-speed day trading, doing 550 trades a day. For you, probably not that much. But start with active trading, and then what are the tools you look for?
Yeah, for sure. So active trading to me, Merlin, is entering on a 1 minute or a 5 minute window or something in between. So something between a 1 and a 5 as my entry window. That's what I consider to be active trading for myself. So with that being said, it's important to me, and my trading went to another level when I understood the importance of the multi time frame analysis. And so I use time frames larger than the 5, and I'll use up to 3 or even 4 to be on the same side of the trend that's currently going. So I might go up to a 60, a 30, a 60, and so on, and identify the trend with regard to what it's doing on those time frames as well. And not until they all line up or get in a line do I actually look to enter on the smaller time frame, which for me again would be like the 1 or the 5. So the multi time frame analysis is proven to be really, really valuable. As far as indicators, it's really fun. I've been using RSI and stochastic, slow stochastic. I've been using a blend of that. Now, stochastic, of course, is an overbought, oversold indicator. So is RSI. So I don't use the RSI in the conventional way. I use it more so as a trend indicator. So, for example, if the RSI is above the midway point between the 30 and the 70, that would be considered bullish on that particular time frame. And then matching that with the slow stochastic with regard to the K line and the D line, looking for the K line, if you're going long, to be above the D line, so that you're trending on all of the time frames, the larger time frames that you're looking at, and then simply looking to time in on the smaller one. And I will say one of the things too that's really helped me even go to another level is, it's one thing to be able to identify trend, and there's a million ways, right, that people teach how to identify trend on any one given time frame. And what I've learned is that not all trends are created equal. And what deciphers one trade versus another, even when the trend is going in your direction. And one of the things that I found to be really, really helpful is I'm using what's called ADX, the average directional index, and that not only measures for me what the trend or confirms the trend, but then it shows me the strength of the trend. And not until I can identify, yes, there's either a bullish or bearish trend going on in the market, but how strong of a trend is it? Because I've seen where, again, some trends are stronger than others, and obviously those are the ones that you want to participate in. So since I've started doing that, the probabilities have even increased greater. So I know that's a very full answer, but it's such a great question, and it's exactly what I look for. Is just being able to, use those smaller time frames to enter into the larger time frames in agreement with you in terms of trend, and then again identifying the trend with a high degree of probability, and then not only identifying the trend bullish or bearish or sideways, but then of course what is the strength of that trend, and is it worth actually participating in it, or when might it be? So that's what I'm looking for, Merlin.
Nice. I like it. There was a good question that came in from Brendan, and I think this is where we all have to understand our personal, our makeup and kind of how we deal with things, how we operate in different market environments. Because for me, I actually really enjoy the very short-term stuff. Now, I used to use a 1-minute time frame, but I'll encourage everybody, experiment with different time frames. With a 1 minute, the probability of being stopped out a lot increases. Right, you could get whipsawed a lot more. Whereas when I moved to a 5 minute, I noticed I wasn't getting stopped out as much. It was a little bit less stressful. So, when I hear 1 minute time frame, I'm always like, oh man, these guys are going to just get smoked, because you get whipsawed on those shorter term time frames on these markets. And here's just an example of the S&P 500. Today was just like an EKG, up, down, up, down, up, down, up, down, up, down. And, you could easily get stopped out multiple times if you're using a 1 minute time frame. And, settling back a little bit, even in this case, this is a 5. Let's see what it looks like on a 1 minute time frame. Actually, not that much worse, but you can see this type of stuff whips you out. So, if you are a shorter term active person, whether it's futures or equities or Forex, even crypto, you really have to have solid risk management so you don't get taken on one of these big rips that go the opposite direction.
Yeah, I couldn't agree more, Merlin. That makes a ton of sense. And I do encourage, especially newer students, and I've been spending a little bit more time on the 5 in my own trading room. And it's important to understand that, because as a new trader, I wouldn't suggest anyone start with a 1 minute. Start with the 5. That gives you a chance to go through the indicators and, make sure that you're assessing things the way that you want to be assessing them accurately. And it just gives you that much more, it gives you 5 times more time to be able to make sure you are on the right side of the trend before you participate. So, couldn't agree more. Yeah, that's why I think the 5 is a good one. The 1 can be really effective, and it does provide a lot of opportunities within those larger time frames. But like you're saying, that does come with some experience, and also a degree of expertise in regard to identifying what those larger time frame trends are. Because if you're accurate with those, that 1 can move really, really well. But it's either if you're struggling with being able to identify the trend on the other time frames, or like today, there were a number of cases where the larger time frames were just not in agreement. The RSI was bullish and the stochastic would be bearish with regard to where the K and the D lines were. So that type of conflict is what causes that market to move up and down, like you're saying, and ultimately maybe stop people out more than they want to get stopped out.
Yeah, absolutely. And I think it's just the nature of the beast. If you're a longer term investor, clearly you're not going to get stopped out as much because your stop losses are much wider. There was a question about setting stops. I think it's Christian. It says, are you still setting up stops on a 1 minute or eyeballing it? So basically you're saying, do you automate your stops or are you manually doing your stop losses when you're trading on those very short term time frames?
Yeah, great question. And no, those are absolutely automated. As a matter of fact, Merlin, maybe this is a good opportunity for me to pull up one of the charts I had for them.
Sure.
And I can show them. Yeah, let me share my screen with you guys. And I was fortunate enough Tuesday to be a part of a webinar that we were partnered up with the CME, and I was a guest on that presentation, and we talked about gold and just kind of what's up with gold. And so I'd been doing a little more with gold over the last few months in preparation for that. And this is a trade that I talked about on Tuesday, but came out of my trading room Tuesday morning. And now this is on a 5-minute chart. So, with regard to the question, I can show another example on a 1, but this is on the 5. And you can see that I actually take the fib. And this is the TradeStation platform, just for those people who are wondering what platform this is. But obviously candlestick chart, 5-minute time frame, GCJ. This is the gold future, GCJ 22. Again, from Tuesday, 5-minute time frame. And what I do is I take the fib drawing tool, which is located in the drawing tools, obviously, and I've kind of pre-programmed it or customized it to where I use it for. That's what I use on all my trades. So with the snap mode on this particular platform, I can literally snap to the top and bottom of an entry candle, and then it will identify for me the 1-to-1, 2-to-1, and 3-to-1 risk reward parameters. So I know exactly. Before or as I'm getting in the trade, I know exactly where the numbers are, and then I can either drag from the matrix or drag from the chart. So in this example, and I have an arrow on the candle, this is the entry candle for me. And without getting into too much specifics, because we only have a half hour or whatever we have, you and I, but I'm looking for this candle to be going bullish in regard to, or rather in line with the larger time frames. And sure enough, this one does. If you look over in the data window, you've got a positive K line, you've got a positive RSI. You're above a moving average line that I have. There's a lot of things going in your favor. So, once price broke the high of that candle, again, I've got these entry stop and multiple targets pre-programmed based on whatever candle I'm trading. In this example, it was I believe it was the 935. Yeah, the 935 on Tuesday. So you can see it, it went right to the 1-to-1, so that's a nice area to be able to lock some profit in. It went to the 2-to-1 and then based. The 300% represents the 2-to-1. And then obviously it's always amazing to show students and even for myself to see the consistency with, when you identify the correct origin of a move, how the professional traders are respecting these levels. You can see the basing literally for almost an hour at the 3-to-1 level, and that's again professional traders taking profits and closing out this particular long trade, which turned out to be a great long trade in the direction of the trend. So again, for me, entry would be up here, stop would be below the low, and then 1 times my risk was at 200% and so forth. So hopefully that's a very clear and a real strong picture to the person who asked the question on that, because that's as you and I have taught for years, Merlin, the importance of understanding the entry stop target and really predefining those with whatever like you said, whatever asset you're trading, always have those things predefined so that you're keeping your risk management rules in place, and you're trading with a risk reward that ultimately is going to keep you profitable.
Yeah, I'll throw a little wrinkle in that one for everybody. When I'm short term, when I'm really short term day trading, whether it's futures, options, crypto, doesn't matter, and I'm on a 5-minute, and I gotta, just because you gotta be honest, is most of the time, I'll say 90% of the time, I'm not using automatic stops. I'm not putting the stop in the system until I have a runner. So like if I open up a trade on a 5-minute chart, my hands are on the buttons because I usually use hotkeys, and I'll have them set up to sell that security as soon as I hit that button. So usually it's gonna be manual stops for me. If something starts to run, and I got a good winner, a really nice winner, then yeah, I'll move up a stop loss up and be a little bit more relaxed. But it's kind of like, it's almost like a boxing match. That very first round of a boxing match is usually boring because they're sussing each other out. And I have to be like on such high offense and defense at that moment when you're that first round that I don't want to put the automatic stop in. Now, once I get to know my opponent and know that I'm in a winning trade, so to speak, I'm trying to tie the analogies together, then I'll put that stop on. But, for the short-term stuff, I generally don't at the beginning. I will later on. For the swing trades, always put a stop on. It's what I do immediately after I put the order to buy or sell or short or whatever it is. I'll go out and put a stop loss on that one. So just showing the different tactics that some people may use there with regards to stop losses, etc.
Merlin, I think that's great. And I think, like you said, it's important to emphasize the fact that, you're trading on a very small time frame and you're watching it, so if something does go, not to mention you've been doing this a long time, so you have the discipline to, if something does go against you, you're going to get out of it because you have, that mental stop that you're going to execute if for some reason it goes against you. And so, yeah, for the way you're doing it, it makes complete sense. And for this one, the nice thing about the automation of this is the fact that it might look fast, but this trade took almost a little over an hour actually to complete its 3-to-1. Now, granted, this is an 11-point move on gold, which is a huge, reward. But for people who don't want to be tied to the computer, having that stop, somewhere, and then of course, modifying it as the trade, like you said, goes in your direction, really great. And knowing the energy of you and I, Merlin, we're not sitting around for an hour to wait for this thing to happen. So we got to have something set.
Yep, absolutely. There's a question said from Peasant. By the way, you've had a few people giving you shout outs and hellos. I didn't give everybody a chance. I don't know if you can see the chat, Jerry, but Othniel Barujo says hi. We got a few others that have been saying hi to you as well. So Trader A also says hi. That's from Pleasant Life, Love, and Happiness. Oh, that's a good name there.
Real quick, those are great people, by the way. They love the heck out of you. And Trader A and Baruch are both in my trading room, and they can't say enough about you. Trader A watches your show every day, and I know Baruch watches pretty much every day as well. So that is those are great people, and they are huge fans of yours. So yeah, I just want to make sure you know that they love you. Awesome,
appreciate it. It's always good to have fans, I guess.
Yes.
Peasant says, do you always hold to 3-to-1? That's a great question. And Peasant, I'll answer this one for both of us real quick. There is never any situation that is always. It's too definitive, right? So there's nobody alive that will say, I always do this. They'll fudge every now and again. So let's be honest here, but I'll let you tackle that one first. Are you always holding to 3-to-1?
I love your answer. That's fantastic. That's one consistent about the market, right? There is no always.
Right?
Let's see. No, the answer to that is what I like to do, and this is one of the reasons that I mentioned the micro a few minutes ago, is the fact that to me it's important to be able to scale out of positions. And you mentioned a runner a few minutes ago, and we've all had the opportunity to be in a trade where the thing is running in our direction, and we're seeing ourselves make all this money. And one of the things that really has helped me to go to another level was when I locked in either enough profit to break even or enough profit to maybe buy a turkey burger for lunch. But in any case, locking in a little bit of profit as the trade went my direction, that gave me the peace of mind, or that gives me the peace of mind to then hold on for that longer winner. Because again, most of us have seen trades go in our direction. All of a sudden we're up all this money, and we've also seen how quickly that can turn. And it's a lot easier to hold on for those larger targets psychologically once you know you've locked that trade into at least a modest winner or something along those lines. Mm-hmm. So what I do is I'll trade, again, manage the risk right off the bat, and either lock in some at a 1-to-1, and then maybe take a little more off at a 2-to-1 and a 3-to-1, and depending on how many contracts you're trading, maybe ultimately take it to like an ATR high or low calculation, which something I talk about in my room. So that's how I handle that, Merlin. I found that to be really effective, and psychologically, again, giving you the ability to be parts of those longer trades.
I like it, and again, it's just rules and having a plan in place. For me, I personally never look at a 1-to-1, 2-to-1, 3-to-1. I'm just looking at what levels are on the chart. So if something happens to line up to a 1-to-1 or 2-to-1, great. But really, it's more important what those levels are in my book. And if I've set a trade that in my analysis has a 3-to-1 reward to risk ratio, okay, fine, I'll take that trade. But if it starts moving up, let's say I bought Microsoft, right? I'm in a nice long on Microsoft. Things are trending. I'm feeling comfortable about it. Yeah, I got some. I'm already past my 1-to-1. I'm moving towards that 2-to-1 reward, but I'm still targeting 3-to-1. If all of a sudden I look over and the S&P and the NASDAQ all of a sudden start to spike down, and maybe this thing just shows a real high volume spike, I might just jump out. I don't have to wait for that. And I love what Jerry says is, maybe I'll just sell half of it. That way I know that I can let that second half fall against me. And if it does drop down significantly, all right, I'll still make a little bit, but the first half that I locked in is going to kind of save my day and make my trade. And then I think psychologically that helps you too, because when you take off half in a nice profit, you can kind of pat yourself on the back and say, hey, I did what I was supposed to do. Now let's see if I just get lucky and have a 5, 10, 50, 100-to-1 runner. I know Brendan knows this feeling with cryptos. You know, you buy something and you're like, okay, I think this is going to go from $20 to $40 and get 100%. And all of a sudden, 4 days later, you're like, wow, it went from 20 to 180. Awesome. I didn't expect that, but I will gladly take that because I've already taken a little bit off of on the way up. Hey, great, let that thing run. But bottom line is we can't let that thing rip back to us and take it all away.
Exactly, and like you said, locking in that half or locking in whatever portion you need to lock in, you know, it gives you that peace of mind, gives you that confidence to let that thing go, like you said, to the 180 or however far it can go. And in some cases, it's awesome. So, in order to be a participant in some of those larger moves, it's a really cool methodology that I have found works for me and the students that I teach it.
So we've got some people in our audience that are just smart Alex. We got one guy, Tom. He's great. He always does this to me. Remember I said you can't always say always. He goes, options always have an expiration date, and options extrinsic value always equals 0 to expiration, always. Okay, Tom, you're right. You're definitely right on that. But I think when I'm using that phrase always, it's more of a personal thing, like how you deal with the situation, not a market mechanic. Like, sure, we know that we're always going to die, right? That's the end result for everybody. There's no fighting that one. Unless you're Keith Richards or Cher, we're all going to end up dying at some point, but those guys will live forever. Better living through plastic surgery, I guess. But as far as the way that we handle things, like if I was to go to you, Tom, or Margaret, or Northside and say, hey, do you always, get out of your stop losses? Have you ever let one of your stop losses go past what you thought? Pretty sure you're all going to say yeah at some point, right? It's just one of those things we all do. Northside here was saying, I don't use automated stops, I use manual stops. And I'll just give a cautionary note, Northside, I'm not sure how long you've been trading, but in my experience, the ones who have taken the biggest losses and had account-blowing losses were people who use manual stops. Because just another $1, another $5, another $15, another 20. Next thing you know, their account is blown. So unless you have extremely strong risk management and discipline, you should put that stop in the system just to protect yourself from human errors and psychology.
Yeah.
On that note, we talked about options there just for Tom because he used that as an always analogy or reference. Give me your thoughts on trading options on futures. I don't do this. I know a couple people who do, and it seems to be gaining in popularity. So maybe you could shed some light on maybe the ins and outs of options on futures.
Yeah, for sure, Merlin. That's it's something I've gotten into in the fairly recently, and I wanted to explore it because some of these larger moves that we see on the equity futures as well as like gold and crude oil. I look at the daily window pretty often, and when you look at some of the trends that these products move, it's nice to be able to day trade them in that direction, or even swing trade them the future itself. But having the ability and the knowledge to be able to participate in options trades is fantastic, even if you're doing things as simple as calls and puts, because as many of your viewers know, it's when you're trading a future, you get margin, and there's some the margin requirements are very favorable in the futures market, which is part of the attraction to day trading them. But when you buy the option, you own that right for as long as you designate, however much time you buy, and that does not affect your day trading margin. So how nice is it to be able to participate in a long move or large move, either to the upside or to the downside, with a simple call or put on a future, while along the way, being able to day trade that product as well. So, given all that, I started to really look into this. And as you know, I traveled the world and taught options on equities for over 6 years. And so making the transition into the options on futures was not difficult for me. It's a lot of the same components with regard to delta, gamma, theta, all the Greeks and days till expiration. And, again, just plugging a futures chart into a, basically plugging a futures chart, and then being able to, have the education to be able to identify which option to choose to achieve whatever goal it is you're trying to achieve. Merlin, what I'm going to do, I'm going to share my screen again with you.
Sure.
I'm going to leave it on gold. And it's funny, gold has been going up. Obviously, you can see this in the chart. The equities have been going down. Oftentimes, those two do run that way. One goes up, one goes down. And I've got an arrow back here. So I'm following the same criteria, that I would look for on a 1 minute or a 5 minute. But now I'm incorporating it in on a daily window. And you can see where we've got our our stochastic goes positive. We're above a moving average. RSI is in a positive zone. So this is actually the origin of this entire move. So, again, imagine being able to buy just a simple call option that increases as, price does this. So it's been a really valuable addition to my own arsenal of trading that I've really liked. And so much so that actually this Monday I'm going to be running a 3-hour course that is available for people online that they can enroll in this. It's going to be a 3-hour live course is the way I'm going to deliver it. And once the course is done, if they're not able to be there live, they get the on-demand version of exactly what I did. So it's going to be talking about how to identify these larger term swing trades, but then I'm going to have some options knowledge in there as well. So not only will they learn how to swing trade these futures, but then also understand how to trade the options on the futures and what criteria to look for, again, with regard to delta, gamma, theta, some of the Greeks, and, how much time should they be buying, those kinds of things. And I also am going to be, identifying not all of the futures come with really liquid options. That's one thing I do. And it's one of the reasons I put this course together is to kind of educate people with regard to, what are the highest, most liquid futures or options on those particular futures. Because again, you've got to have liquidity in the futures market, just like you and I teach in the stock market or in the futures market, whatever it is. And GC happens to be one of those futures that does carry some really liquid options to it. So again, to be able to trade something like this over a longer term, and just to put this in perspective, if I fib this off with the drawing tool, the way that I did this, I mean, there's your 3-to-1, by the way. You can see where, there was some profit taking at that 3-to-1 level, but 824 to 875, huge move on gold, and obviously this thing's continued to go. So these are the kinds of moves. When I saw this, I'm like, well, okay, how can I become a part of this? And while doing that, not tie up my day trading margins so I can continue to day trade on a regular basis. So that's why I'm offering this course Monday, and that's why I really started to pursue this and get a good understanding of how I can implement this into my own trading.
Now, with regards to your options on futures, are you primarily sticking to the indexes with those options because of liquidity?
Yes. It'll be primarily focused on the equities, but then it will include crude oil and gold. Those are the other two products outside of the equities that I'm going to be including. Because again, the great ATR and the great volume that both of the CL and GC come with. So given all that, in addition to the equities, I'm going to be sharing those two products as well in the course.
Cool. Margaret says, what do the blue arrows mean? Margaret, in TradeStation, you can actually do a thing called paint me or show me, so you can add in different indicators. So he's requested the platform to show him specific conditions. I'm not sure what those conditions are that you have drawn out there, but that's usually what those arrows and the little dots that are above and below the candles. What do you got? All kinds of stuff on there, buddy.
Merlin, this stuff, again, I want to make this as simple as I can, right? I don't want to do any more than we got to do here. So you're entirely 100% right, as always. The arrows, actually, I was designating, like, for example, I like to show people exactly where the origin of a move is, and this is the origin of this move to the upside. So I put that arrow in based on what I was reading with the stochastics. But let me move that out. And we touched on this last time, and people loved it. I love it myself. I use this all the time. But these blue dots literally identify for you the origin of a move. And the way they do that is they're looking for consecutive closes in a certain direction. And this is actually an indicator that is built within TradeStation. Now, I've customized the inputs a little bit just to for my own trading and for the the students that are with me in my courses and in my room. But so for example, you can see a couple of closes in the same direction. It literally identifies for you by putting a blue dot on there, and sure enough, that was the origin of this entire move. And then of course the the red dots up here, you can see that signifies the origin of a downtrend. And again, you put that in conjunction with some other indicators, you can see the moves that come after. Now again, just like any indicator, I never use this in and of itself. This is to be used with other indicators, like for example stochastic or RSI or even a moving average. But that's a pretty cool way to go. Actually, the other piece too, you guys see the yellow dots, which I just thought was fascinating. I actually put this on my radar screen that we use in the room. But these signify the inside bars, and as you know, and one of the more popular trading strategies out there is the inside candle or inside bar strategy. Where you've got kind of a rally or kind of a an uptrend, and then all of a sudden you've got a basing here. In other words, price never broke out of the previous candle. Well, this indicator literally identifies for you those inside candles, and then of course if we break the high of the bigger candle, the trend generally continues. And as you can see, actually I can mark this off right here. You can see once we broke the high of the larger candle, there we go. And literally, actually check that out. Literally, it's still amazing. Literally right to the 3-to-1. There's the number right up there. That's exactly where it went. So, pretty popular strategy. I use it more for intraday trading. But again, it's just another way of being able to participate in an uptrend or a downtrend as the market's taking that pause. And this is again is an indicator that's built right within TradeStation called the inside bar. So hopefully that helps some people as well.
Yeah, we talked about this on yesterday's show with Corey on how part of our jobs as traders is obviously to analyze the markets and make the right decisions, but another piece is to say what platform gives me resources and tools that I can use to make my job easier from an analysis perspective. So you can see that Jerry's got a whole bunch of tools and resources on there to help him easily make decisions. Now, that might be confusing to some of you, but if you do me a favor, Jerry, right mouse click anywhere in that chart.
Yes, sir.
And you go to Insert Studies. Oh, I can't see it. Jay, did you right mouse click?
I did.
Oh, the box isn't showing up. So
format symbol on the top. Format analysis techniques.
No, it's not showing up. It just has to do with the the Zoom room. So it's not going to show the pop-up window, unfortunately.
Okay.
But you guys would see there's hundreds of different indicators in TradeStation. Honestly, I think it's overkill with TradeStation, but when you have it'll literally put a dot or paint and show you exactly which bar meets that criteria. That may be something helpful, and maybe down the road I can do a show specifically on that just to show you guys the different strategies and techniques. Again, you've seen my charts. I don't like to pollute them with anything other than just a couple horizontal lines, maybe a couple trend lines. Other than that, I want them as simple as possible without any obstruction from indicators. I mean, even here, I put on ADX just because Jerry was talking about it, but I usually wouldn't have that one on. Even the moving averages I have off right now because I don't need a moving average to tell me what price is doing for gold right now. So you've got the 20, the 50, the 200. They're all pointing up and going to be sloping up because what's happening? Price is trending.
Yeah, I think that's important, Merlin, what you're saying, and that's something that I always am very cautious about because, you'll see some screens and they have there's, like you said, there's so many things on there that even conflict with one another that it becomes overwhelming. And so I've added a couple of pieces here and there, and like anything, the more you're around it, the more you see it. Obviously, it becomes second nature to you. So it's not it's more of a help than it is a hindrance. But yeah, that's certainly a caution to people when they're putting indicators on. Put indicators on that blend with one another, but don't overdo it because you can definitely overdo that. I've done that at one point in my life as well, and I think most people have, where they're putting so many things on that it just it can get confusing.
Yep. What is there? There's the old phrase: if you torture a chart long enough, it'll tell you everything that you want to hear.
There you go.
All right, Jerry, so you mentioned about your course. Tell me a little bit about how people can get in touch with you. I know you've got a whole bunch of stuff going on. There was a question, does Jerry work for OTA? Jerry used to. He no longer works for Online Trading Academy. He works for You Can Trade, as you can see on his screen there. I have your website up here. How do they navigate that to find you?
Yeah, thank you, Merlin, for putting it up. Yeah, guys, I'm with You Can Trade. I'm the futures coach with You Can Trade. Merlin has the website up there, so it's youcantrade.com. If you go to coaches, you'll see my name on the left side of the screen, and that will pull everything up. I host a day trading room from 10 o'clock to 12 o'clock Central Time every day. That's something that you can become a part of if you wish, but it's a great room. We have a Trader A and Baruch and a number of people from that fabulous trading room are here with us today watching this. They love Merlin. They love this show. And so anyway, I do that show from 10 to 12 Central Time, Monday through Friday. I've got 2 courses out there right now. I have an intro to trading futures where I've kind of taken all the years that I've been trading the futures market and the stock market, and I put that into a 6-hour on-demand course. So that course is available online. I have the live course going on. It's my second course. I have the swing trading options on futures course, which is also going to be on demand, but it's going to be delivered Monday as well. And then there's also a section on there for one-on-one coaching. So I've had a number of the students in my room and who've been through the course who are making tremendous progress in their own trading. They have set up one-on-one coaching sessions with me. Those are generally about an hour long, and they are via Zoom. So, they can set up multiple sessions and we go through whatever it is that you're trying to achieve within your own trading, whether it be, like Merlin said, platform related or, entry stop target related, whatever it is, those are things we specify in a one-on-one coaching session. So I'm grateful and fortunate to be able to offer a lot of things to Merlin to continue, like yourself, to educate people all over the world. And it's a pleasure to be able to do so.
Well, always great having you on the program. It's been a while since we had you on. Hopefully next time we'll get you on. You'll be actually out here in California in my studio doing the show.
I've been telling them that in the room, Merlin, and that is a goal of mine over the next couple of months. I want to get back out to Cali. I miss it out there. I'm looking forward to getting back out there. And, I'm going to take some time away from the beach to set up to go do your show live. So that would be awesome for you and I to do this again in person. It's been a couple of years since we've done it, so I would love to do it.
Well, we're looking forward to it, man. Thank you so much for coming on today. I appreciate it.
Thank you, Merlin, for everything. Talk to you soon.
All right, take care. Guys, that was Jerry Baldwin. He's with You Can Trade. You can find out more information by going to youcantrade.com. That's the page I got over here. Click on we had coaches, and then you'll see Jerry's stuff there. You can actually click on the top there to find more about him, and there's also contact details if you want to reach out and contact Jerry. All right, that is pretty much it for that segment of it. I do have some charts I want to take a glance at and dive into before we get to wrapping up today's show. So let's do that. We didn't get a chance to bring up any charts here, so I want to do that. A couple pieces. Let me see real quick. I mentioned yesterday, and I think Serge, hopefully you're still here. Hey, Chris, me too, bud. Me too. I'm jealous. Serge asked, do you have any idea for good oil ETFs? What are some good oil ETFs for a Roth IRA account? And I guess this is a really challenging question because, first off, all of these ETFs for oil are very different in what they're constructed or made up with. So I will bring up a couple here, and let's go off to the side. And as far as in a Roth IRA, the go-to is USO, just because that is an actual oils ETF, right? It's got futures in there. Now, the problem with this is it will never fully match the price of crude oil simply because it's using futures products, and that because it's using forward contracts, it could have some price discovery problems, meaning it's not going to perfectly track oil. Then you go into something, if you want to use leverage, you can look at like UCO, which is like double long. Now, personally, I don't think you should be using any leverage products in your IRA accounts. Remember, it's a retirement. It should be safer. When you start using double and triple leverage ones, you really put yourself in a dangerous spot. So I would not recommend using leverage ETFs in your IRA. That's UCO. IEO is another one. And these are, I'll put volume down at the bottom. Bear with me, I have to add this one in, just to give you an idea of how liquid they are, because some of these aren't that liquid. Let's go volume, throw that one on there, and let's see. Oops, there we go. And there you go. So you can see volume down there at the bottom. Cut that one off. Okay. So volume is rather low on IEO. You have just a few 100,000 traded per day, but it's another one that's oil and gas exploration. So it's not exactly futures products or spot of oil. It's your exploration and extraction companies, and that's what most of these are. DBO is another one. So DBO is the Invesco DB Oil Fund, and again, for me, the criteria I'd be looking for just to be safe with these things, Serge, is number one, its overall volume. And again, I'm just positioning this from buying in an IRA. Number one, make sure it's liquid and you have a lot of trading volume. Number two, you should probably stay away from leverage ETFs. So whether that's double long, triple long, single short, double short, or triple short, stay away from those. Go with singles. And then you have to ask yourself, do you want to go the spot price of crude oil with futures like UCO, which could have some price tracking problems? Or do you take a step back and go to those who might benefit from oil and go to the explorers and things like that by using a different ETF like IEO, and there's a couple others. So those are the main ones that I could mention for oil. But again, what aspect of oil? The actual spot crude price? Are we talking the oil refining companies? There's a lot of open thought there. How about ExxonMobil in my retirement account? You don't have a retirement account. What are you talking about? Your retirement account's a crypto account, buddy. Here is XOM. I would love to go back in this show and see when we had John Rowland on the program. You guys might remember we were asking, like, well, what do you do with oil right now? And he goes, buy producers. He goes, I would buy ExxonMobil and Chevron and buy those companies right now. Boy, I want to say that was back in 2020 when he was talking about that, and there's been one hell of a rise in the price of oil companies since then. ExxonMobil's looking absolutely fantastic and has been for quite some time. All right, oil producers have leverage to oil price. Correct, they do. Other parts, Jerry mentioned gold, doing a lot of gold. Somebody asked me about my silver. I am not getting out of silver. Remember, I sold the 2350 calls on silver, and Brendan's probably rolling over right now going, why would you sell a call on your silver? Generate extra income streams. I already made a very nice chunk of profit on that one. I expected it to turn at this current level right around 2350. So, we popped up of there, and we'll see what happens over the next day or two. But we've had a pullback from that 2350 mark. So I'm hoping that in another 2 weeks, I still have some time, that will end at $23.49. That's I want to end there. That way I can keep the silver, sell some more calls against it, and generate more income on top of whatever gains I'll get off the SLV anyway. So there we go. And I'm with you, Brendan. I think silver and gold, you're looking great if you're holding for the long haul on those two. What other questions you guys have? What time we got? 1:44. I did have other questions that came through. And I think that this is more of a philosophical perspective, but Les, you sent this one in the other day. It said, a basic statement about our government is that they want to know if we're making money. That's absolutely true, 100%. With that in mind, won't any rules that the Biden administration comes up with about cryptos take that into account? Unless you vehemently disagree with that statement, what measures do you think the Biden administration might or should come up with? Well, it's a great question. Like, what do I think he's going to say in his executive order, which I'm still anxiously waiting for? I think he's going to make it clear that define the roles of what is a security, right? So, now you have this big issue. Is Ripple a security? We talked about it today in the Crypto Investor Live program. There's a lot of specific projects that skirt the line of this is a security. Some are very obvious. The one we mentioned today was, in my mind, absolutely a security, but it's masquerading as if it's not. So once those rules are established, and I'm hoping that he gives direction to the SEC as well as the Fed and other organizations to say, this is this. I know it sounds profound, but that we're lacking that clarity right now. So I'm just hoping he gives some clarity. I do not believe, even though it seems like a lot of the ranking Democrat members of Congress have been somewhat against crypto, which I was surprised about. I don't think that they will outright ban it or say anything negative like that. I think that there's way too much money involved in the U.S. with digital assets as an entire ecosystem. So I'm not worried about that at all. I actually am looking forward to what Biden's going to say, because I think it's going to really boom the crypto space, because it's finally like, oh, great. I know what a security is because you just told us. That means that these ones are off the table. Now I can focus on those. Oh, you told us what a stablecoin criteria is and what that means. Great. This is a stablecoin I can buy, and these ones are not. Oh, that's a stablecoin. Great. That means now the FDIC can ensure that because you have told me that it's actually a currency. Therefore, that needs FDIC protection. Oh, these are securities. Great. Now I can get SIPC protection on those because you have designated those as securities. Now all of a sudden, crypto goes under the same umbrellas as stocks or money and Forex, and we get that type of protection. To me, that's what I'm excited about. What do I think he's going to come up with? I don't think he'll say anything drastic. I think he's going to try to give some clarity and say, I want this organization to work with this organization, make sure that this happens. Done. That's it. Banks are in crypto now, so it's here to stay. Yep. I hope you're being sarcastic with that one. Has he made anything really clear? And look, I don't think it's just a Biden thing. I would say the same thing about Trump. A lot of times presidents don't really make things as clear as possible. Bottom line is it should add some clarity to it, or at least get organizations the power to give us clarity. And that's what I'm waiting for. I'm hoping that happens. Okay. Yeah. Maybe, I find myself almost like I feel like I'm my own third party here. I like some of the issues. I like some of the ideals and principles of the Republican Party, some for the Democrat Party, but to polarize myself and say I'm this or that, I try not to live my life polarizing myself. Actually, I live my life making myself non-polar. All right, I did not take a minute to put in the economic calendar information, which I will just show you my screenshot here because I only took one really. And that's your earnings calendar for tomorrow. So let me bring this up for you guys so we can get that out of the way. Here's your earnings calendar for tomorrow. Nothing really amazing today, but, this is for today, excuse me. You had Broadcom, Costco, Best Buy, AeroVironment, don't know what they do, and Marvell Technologies. The real surpriser for me really was just Best Buy. They barely beat earnings, but they were up 9% today. So we'll take a peek at that price chart right there and go to... No, there's your Best Buy. Again, this is one of the thorns in my side in my trading career, Best Buy. Ugh, I'd hate Best Buy. But either way, nice pop up there in Best Buy today. Who knows, you would think with all the supply chain disruptions and all that stuff, chip issues, that they would not have had as great sales. Well, it looks like they did pretty darn good. A lot of people are using crypto to hide their activities. However, that said, I think you guys all know the most utilized currency in the world for illegal activities is the US dollar. Period. No argument. It is absolutely the US dollar. $100 bills. The most utilized currency in the world for bad illegal activity. They can't trace the $100 bill. Well, there's a serial number on it, but good luck with that one. Okay, what else do I have? So that was pretty much it for today. Forex for the economic calendar for tomorrow. There was some stuff. I actually had it up here, but apparently I didn't take screenshots of it, so I'll bring it up for you right now since I've been just slammed with all the stuff that we're doing. Now today, you did have some actual, I guess, relatively good news. I'll start there just so we can see it. You can see here the services PMI numbers. Natural gas storage was right in line, but it's these pieces here. Factory orders were a bit higher than expected, almost double the expected rate. So that's pretty good, meaning that factories are filling up and getting more business. That's good. And then for tomorrow, you have average hourly earnings or unemployment rate, which are expected to drop as well. From 4% to 3.9%, and that is really the main stuff happening for tomorrow. There is some retail sales for Europe, construction PMI coming out for the UK, but most of it's going to be the US based, a little bit in Canada with IV PMI, building permits, and labor productivity. Christian says, yeah, there is some statistic out there that says, I forget exactly what the number is, but it's really high, that the number of $100 bills that have traces of cocaine on them are, it's like off the charts. Okay, welcome to America. Here's your $100 bill. All right, guys, that's going to do it for me for today. Tomorrow is Friday. I haven't done a Friday show in 2 weeks, so I'm looking forward to having a nice glass of whiskey with everybody. If you have comments, questions, feedback about different topics, you can put those down below the YouTube videos. I know you guys have been doing a lot more. I appreciate that. I just have to incorporate it in my routine to go and read all those questions and comment and give you guys feedback on it. So thanks for all the questions under the YouTube videos. That definitely helps. If you have something else you want to discuss or a topic for the show, send it in at TraderMerlin@gmail.com, and I'll get to all those on tomorrow's show. Until then, happy trading. Hope you have a great Friday, and I'll see you mañana.